does the S&P 500 index work? Imagine trying to get a clear picture of how the biggest companies in the United States are doing all at once. That's where the S&P 500 comes in. It's a way to see how the stock market's largest players are performing collectively. The S&P 500 is a stock market index that tracks the performance of 500 of the biggest publicly traded companies in the United States. These companies make up about 80% of the entire U.S. Stock market by market value. When you hear about the stock market going up or down, chances are the S&P 500 is a big part of that story. The index is what's called a market capitalization weighted index. That means each company's influence on the index depends on its total market value. Market value is calculated by multiplying the company's stock price by the number of shares available for trading, which is called the float. Larger companies like Apple or Microsoft have a bigger impact on the index because their market values are higher. To figure out the index level, you add up the market values of all 500 companies and then divide that total by a special number called a divisor. This divisor is not fixed. It gets adjusted over time for things like stock splits, dividends, or when companies are added or removed from the list. This keeps the index consistent and comparable over different periods. The companies included in the S&P 500 have to meet certain rules. They need to have a minimum market capitalization, which is currently around $15.8 billion. They also need to be based in the United States, have positive earnings, and be listed on a U.S. stock exchange. A committee regularly reviews and updates the list to make sure it accurately reflects the large-cap U.S. market. Traders and investors use the S&P 500 as a benchmark to measure how the overall market is doing. Many investment funds and exchange-traded funds track this index, and options or futures based on it are popular tools for hedging or speculating. Because larger companies have more influence, movements in big firms like Amazon or Alphabet can sway the index more than smaller ones. This weighting affects how options prices are set and how traders develop their strategies. In short, the S&P 500 works by combining the market values of 500 major U.S. companies, adjusting for corporate actions, and giving a snapshot of the health of the large-cap stock market. It's a key tool for understanding market trends and making investment decisions.